The NASDAQ 100 is down around 3%. Are we about to see a collapse of the tech sector? That's what we're going to cover in this episode. If you're new here, make sure to subscribe to the channel. We post multiple videos a week on the stock market and on other opportunities we see across asset classes. Now we're going to start off this video by taking a look at the technical picture of the NASDAQ 100 on this daily chart, then zoom out to the longer term time frame, see what's going on there. And then I want to take a look at this chart right here, the NASDAQ 100 divided by the S&P 500. You can see this is the .com bubble, and we're right here. Are we about to see something similar to what happened during 2000 to 2003? And then we're going to discuss the fundamentals behind the tech sector. So without further ado, let's get right into it. So I want to start off with this 8-hour chart of the NASDAQ 100. This is what we were looking at with our members on the site on gameoftrades.net. We had a nice breakout of this downtrend line here, back test, and we broke above this line of support. But in today's session, we started to dip back below that level of support. So we have a false breakout scenario. That's a bearish development. It's something that we should be watching out for. It's not the end of the world just yet. We still have this support level right here. This is a strong level of support at 12,760. If we see a move down past this level in the next trading session, that would be a bearish development. We'd be looking for much more downside on the NASDAQ 100. If we put the MACD on here, that would be combined with a bearish crossover on this chart, on the 8-hour chart, and we dip back into that bearish territory. So we know that with the MACD, if we're below that zero line here, we're in a bearish trend. So if we see this kind of move, that'd be worrying. We're really at that turning point on the NASDAQ 100. Throughout this entire period, we were bullish on the NASDAQ. We had the MACD healthy above that zero line throughout this entire period. Then we dipped below. That was a bearish trend right here. And now we're at that turning point where the NASDAQ 100 has to decide which way it's going to be going. Now, if we do have that fail below that support level, we'd have that bearish crossover, and that would start to look like what was happening here in 2018. Very similar. We had a bullish trend throughout this period. Then we dipped below, and you had that counter trend rally. Very similar technical posture here. A nice breakout, back test, resumption, then a fail. And that told you that there was more downside to come, that bearish crossover near the zero line. So that's something we're watching out for on the short-term time frame, but you have to keep in mind the longer-term chart. All right, so we're going to zoom out to a daily chart of the NASDAQ 100. This is the actual index. We're not looking at the futures chart, and we're on a daily chart now. So we have that price channel right here. So we had that breakout throughout the health crisis. The tech sector was on fire throughout this period. So you can see the general picture is extremely bullish. If we go on the weekly chart, we're looking at a very bullish market on the tech sector. You cannot forget that. This was a perfect price channel throughout the entire bull market. We broke out above. And so that tells you that tech wants to head much higher, at least in the short term. Could we see a correction here? Absolutely, but we're not looking for a deeper dip than down to this line of support. This price channel is going to be massive support, and we do expect that to hold. So from current levels, let's measure that up. That would be a 9 to 10% correction from current levels. That is something you could expect on the tech sector. Again, let's go to a daily chart. If we do react off this trend line that I've drawn and break below that support level we just talked about at 12,760 around right here, if we start breaking through that, that's bad news. And you can see how that would look like on the MACD of the daily chart. You'd have another bearish crossover below the zero line. That's extremely bearish. Let's see if we can find one of those here. We had one right there, that's a bearish crossover, and one right here. So that led to some pretty big drops on tech. So again, could potentially lead to a drop down to this area here. Here we have some nice levels of support that you can buy the dip off of, especially near that strong line of support. Now, the reason why we're looking for downside is not because we're always bearish on the market. It's because we are looking for opportunities. If the markets come down here, we will be buying the tech sector all the way, because that is a high probability entry just above that long-term, very significant channel. This is how you have to think as a swing trader. You want to be capturing these large moves up and down, not these short-term price action where you get caught up on that daily action. You want to capture these large trends. And I just want to quickly clarify something. It depends on what happens throughout the rest of the week. Maybe by the time we post this video, we'll have bounced here. If we stay above this level, that's bullish. All right, we want this support to hold. If you're bullish on tech here, this is a beautiful entry, right? We've just had that breakout back test, and we're back testing that level of support. It's still support. It hasn't broken yet. We haven't had a proper bearish crossover yet, so this can still turn around and head higher. In fact, if we go on that daily chart and put up the 100-day moving average, you can see what happened here. We had a dip below it, snap back above, and now we're back testing it. Now it's a scary candle, but it can still reverse. We could still print a candlestick tail here and start to head higher. You can see every time you have a snapback above the 100-day moving average. Every time price crosses it from below, you tend to have a rally. This is something that we see over and over again on the NASDAQ. It's a very significant level of support, that 100-day moving average. So being long right now just above this support is objective, but you want that stop loss to be set just below it, because if we break down, we're looking for a 8 to 10% correction on the NASDAQ 100. Now let's take a look at this chart right here. This is an extremely important chart. It's something that you should be looking at if you're interested in stocks, if you're interested in the tech sector. This is a chart that represents the outperformance of the tech sector compared to the rest of the market. So that's been the trend throughout this entire bull market since around 2003, when the dot-com bubble actually bottomed. You immediately started to see that outperformance in tech. And of course, recently, since the COVID-19 crisis, we saw a massive move up in tech compared to the stock market. So the question is that something that's going to continue, and how is it going to affect the stock market? We're going to take a look at that. First of all, start with the daily chart. What's happening here? We have a breakdown of that level here, of that price channel. You can clean that up to have a nice breakdown back test, and now we're down to this support. All right, so we're going to talk about what that support is in just a second. But just looking at this daily time frame, it looks like quite a bearish setup here with a breakdown, back test, and resumption. We're going to see if we undercut this 3.3 level. But if we zoom out here, let's see what that level is. It corresponds to the top of that dot-com bubble. And so what's happening right now, it's a test of support. That's as simple as it gets. You have a breakout here, a breakout above resistance, and then a consolidation, and then a test of support, and we'll see if that holds. If that holds, then we're looking for this tech outperformance that we've seen since 2002 right here to continue, all right? Because that's a bullish setup. It's a breakout back test. That's when you want to be entering the tech sector with a stop loss just below. We might start to see the FANG stocks picking up some speed to the upside again if we see that level hold. But if we break down, right, and that's something that you should be prepared for, if we break down, then could that be the top of the tech outperformance? Absolutely. What you have is a big fat false breakout. That's not something you want to see on a chart. From a trader's standpoint, that's about as bearish as it gets if we fail back below that. By the way, if you are enjoying this video, make sure to hit the like button as hard as you can. It just takes a couple of seconds and it helps our videos out massively. So we really appreciate that. And of course, subscribe to this channel if you haven't already. Now let's move on from this chart and take a look at the fundamentals behind the tech sector. So we're going to start off by taking a look at that 10-year yield. This is a weekly chart of the 10-year government bond yield. So for those of you who are new here, interest rates is what determines what kind of market environment you're in. If you're in a low interest rate environment like we're currently in, like we've been in since around 2008, this is the type of environment where you'll see growth stocks do very well. And so that's why we've seen tech perform so well throughout the health crisis, because we had interest rates so low. Those companies are able to borrow a lot of money and forecast massive amounts of growth. And so when taking a look at tech, you still have to consider the fact that we're at 1.7% yield, and that is still a very low interest rate. That's still very low, and in that environment, tech is going to continue doing well. So we're bullish on tech in the short term, right? We expect this chart, the NASDAQ 100 divided by the S&P 500 to actually hold and resume here, because we're in that environment. We're still in that environment. Now, we have had a very strong rise of interest rates recently that may put some pressure on tech, but from a historical standpoint, when zooming out back to the 80s here, we're very, very low. And so in that kind of environment, growth does well. Now, once rates start to really pick up some speed, and this is what we've been talking about with our members on gameoftrades.net, this is the trend line to be watching. I'm going to jump to a monthly chart here just to show you guys this price channel. This is the resistance line to watch. If we break out here, that's when you want to be booking profits from growth stocks to value stocks. If you like this type of analysis and the approach we have to looking at the markets, make sure to go and check out our website at gameoftrades.net. We have a free trial for our service. You can try it out for a week, and you get access to these articles that we post based on our research on multiple asset classes, cryptocurrencies, the stock market, precious metals, emerging markets, commodities. So if you're interested, make sure to go and check us out. Now, that's about all I wanted to cover in this episode. If you enjoyed, make sure to drop a like and subscribe to this channel if you haven't already. In the meantime, good luck on your trading, and see you next time.
So, you want to invest in the cryptocurrency market, but you don't know where to start? Welcome to the co-vesting module on Prime XBT. The co-vesting module helps investors and talented cryptocurrency traders find each other. With an easy-to-use interface, you can compare and replicate successful strategies with a proven track record. You can follow multiple trading strategies to diversify your risk. Co-vesting module on Prime XBT. They trade, you profit.